I got to ask you right off the bat, are we going to see oil at $20 a barrel?
We're certainly seeing oil in the 20s, and if this kind of panic continues, this financial contagion combined with the virus contagion, we could certainly see oil prices lower. Hadley, I would say that it's not a question of whether a price war is going to begin. It has begun, and that's, as you're talking about this morning. And the backdrop to it all is, of course, the virus itself. That's what really splintered the alliance. In the first quarter of this year, we think at IHS Markit that oil demand is going to be almost 4 million barrels a day lower than it was in the same quarter last year. And that's what got Saudi Arabia and Russia at odds with each other at the end of last week in Vienna. It has now led to this extraordinary collapse.
Dan, when you think about this a bit more broadly, kind of against the backdrop of history, when we talk about the fight for market share, it didn't work for the Saudis in '85, it didn't work in the '90s, and it didn't work just a couple of years ago when Ali al-Naimi was at the helm there. When you think about this in terms of what this means for Saudi Arabia and the leadership there, how damaging do you think this could potentially be for Mohammed bin Salman? Because he's taking a major risk, isn't he? He's not just taking on Russia, he's taking on potentially President Trump.
Well, I think that actually, if you think back to these other battles for market share, I mean, the Saudis had continued in the 80s to contract their production and lost market share, and by flooding the market, they regained it, and finally, a deal emerged from it. But this does create, can you make up in volume what you lose in price? And that's not at all clear. And of course, this also comes at a time when it's not just about oil, but it's about the global economy and this freezing up we're seeing. Maybe we're starting to see some recovery in China, but I tell you, Hadley, in the last week, you can really see a big slowdown coming in the United States. One cancellation after another, people working at home, people traveling less, and it's obviously reflecting the financial markets. So I think the distress on the demand side is going to continue to be there, even as people fight for market share. They're fighting in a very constrained space.
Hi, Dan. It's Matt here joining in the conversation from Singapore. Do you think that the Saudis perhaps misjudged the collapse that we've seen in oil prices today as a result of what was announced over the weekend to try and, I guess, gain back some more of that market share?
I don't know if they misjudged it. Clearly, the Saudis and the Russians have a different perspective. The Russians' budget is pegged at $42 a barrel. The Saudis need, as Hadley was suggesting, a higher price for all the things that they're doing. And I think each side is stared at the other and said, we're not going to budge. And I think the Russians did not want to make a deal that would extend till the end of the year, partly because as they see it, the situation could actually get worse, and maybe there'd be need for further cuts. And I think some in Russia had always been against the alliance, the OPEC, non-OPEC alliance to begin with anyway. And of course, one target, particularly of the Russians, is a continuing growth, this extraordinary growth in U.S. shale over the last several years. And we can be sure of one thing, that these prices are going to bring that growth to an end and send it into reverse.
Given that we are seeing a 31% pullback in the NYMEX contract as we speak to you, do you expect some sort of conciliation between perhaps the Russians and the Saudis over the next day or so as we see the weakness that we are seeing in the oil markets?
Well, I think there are a lot of calculations that are both strategic and big picture, and also personalities involved in it as well. I think, if you're saying, will be some kind of panic that they'll say, well, we've got to get together. At some point in the past, people have gotten together. Remember, the 2014 price collapse began when the Russians did not want to participate in cutbacks, and then Saudi oil minister Naimi said, we're out of here, let the market do it. And it took 2 years to get together. You raise this question, if this is so violent, will it pull them together? But I think in a way the Russians have a more diversified economy, and I think this may not end in a couple of days. It may take longer, but we'll see what kind of informal traffic now takes place to try and stabilize the market.
I'm with you on that, Dan, because when we think about this a bit more broadly in terms of taking back that market share, I want to follow up on something you just said, talking about sending the U.S. shale producers and that growth into reverse, what we could potentially see in the next few months as a result of not just the bigger picture, which is, of course, coronavirus and the U.S. response to that and the Chinese response to that, but also the implications for November 4, the U.S. election. Does this make it more difficult for President Trump to be reelected?
This is part of a larger picture. First, of course, have to say every U.S. company now has spent the weekend going over their numbers. How do we cut our budget? Let's pull down expenses. Let's not drill, et cetera, et cetera. So we're going to see an impact very quickly. And I think this fits into a larger picture. Of course, this hits a segment. This hits Texas, which is very important in the campaign. It hits other states. But it's really part of a larger downturn. 2 years ago, we had almost 3% economic growth in the U.S. Now it'll be somewhere between 1% and 2%. And nobody's going to be boasting about how great the stock market is doing at this point. So I think this changes the political outlook. Of course, it will change again. Who would have thought 2 weeks ago that Joe Biden would be virtually anointed almost as the next candidate? So a lot can happen. But this, what you're getting at is that, of course, for the Trump administration, the success of the economy, almost no unemployment, and a high stock market were all pluses going into the campaign. It looks like it's going to be different. And also, there are a lot of questions now about the degree of coordination that's necessary to deal with this virus crisis, because you need a lot of cooperation between the federal, the state, and the cities. And the coronavirus has now become a central issue in the presidential campaign, which makes it more difficult to deal with. And it certainly does change the outlook and make it change the balance going into November. Absolutely.
It's really the politics of fear, isn't it, at play, what we're going to see in the next few months or even days. But I have to ask you before we let you go, Dan, when you think about this in terms of the shale industry in particular, obviously this is an industry that's highly leveraged. There's a lot of debt. Do you think, consolidations in the short term and potentially President Trump urging the banks to bail them out longer term?
Well, I don't see him urging the banks. I don't see how that happens. I mean, there's a lot of questions now about how the banks will deal with this. Will they kick the can down the road, or will they, be forced to act? I think we'll see bankruptcies, and I think we're going to certainly see consolidation as people have to get their costs down to weather a storm that I think none of them really expected that they could see. I mean, when people were doing forecasts, $20 or $25 or $29 oil just wasn't in there, but it shows how important this OPEC Plus arrangement was, but how difficult it is to maintain it when you're really caught up in a pandemic, and a viral pandemic, but also what is turning into an economic pandemic.
Dan, as we've been speaking, crude has passed a new low, sitting around $27 a barrel. Fascinating to watch this play out over the last couple of hours. And you've got to wonder how worried His Royal Highness Prince Abdulaziz and even Mohammed bin Salman are right now, because as you said a little bit earlier, it doesn't seem as if they're gonna hold back at this point. Well,
but there's a question how much. Obviously they've cut prices, and that's contributed to this. But you need a lot of volume to make up for this kind of decline. But it is such a violent situation that you at some point people will start talking to each other. But right now, the war has begun.
Do you say President Putin as winning so far?
Well, I think he has shown himself a master judo player on the world scene, and I think there may be a miscalculation as to his position. I think that Russia has built up its reserves again. It doesn't need as high prices. Its industry operates with a depreciated ruble, and he has a more diversified economy, and he's not trying to remake his economy in 10 years. So I think he has staying power. But of course, in a storm of this kind, there will be shocks and unexpected crises and bankruptcies that will shake the system. So we are in another period of true turmoil, and it's, when we've had a financial crisis, it was just a financial crisis in 2008 and 9, but this is now turning into an economic crisis along with a health crisis. And just in the last day, 2 U.S. congressmen, 1 senator, 1 congressman have been quarantined, and I think we're going to see a lot more freezing up of economic activity in the United States, not because of economics, but because of the virus. And it goes back to what you've talked about. The fear is now pervasive.